What's the single most important rule in trading? Is it a secret indicator? A perfect entry signal? No, it's much simpler. Yet it's the one thing most traders get wrong. It's this: protect your capital first and chase profit second. Every single trader, myself included, starts with big dreams of doubling their account overnight. We see those crazy charts, we hear the stories, and we think, that's going to be me. But the market has a funny way of teaching you a lesson, and it's usually a painful one. The first lesson isn't about how to make money. It's about how to survive. Think about it this way. Losing your trading capital is shockingly easy. Building it back, that's 10 times harder. If you have a $10,000 account and you lose 50%, you're down to $5,000. Now, to get back to where you started, you don't need to make a 50% gain. You need to make a 100% gain just to break even. That is a monumental task. Most traders don't fail because their strategy is terrible. They fail because their risk control is non-existent. They go all in on a sure thing. They move their stop loss because they feel the market will turn around, or they revenge trade to win back a loss. Sound familiar? We've all been there. The truth is, protecting your capital is a more difficult and more important skill than making money. This might sound counterintuitive, but all the market legends, the traders who have lasted for decades, they talk more about risk than they do about profit. They are obsessed with defense. Why? Because they know you can grow your wealth if you lose the very tool you need to trade, your capital. Once that's gone, you're out of the game. It doesn't matter how brilliant your next idea is if you do and have the money to place the trade. Your ability to trade tomorrow is more important than the profit you hope to make today. One of the biggest career killers in this business isn't a bad analysis, it's overconfidence. You have a few winning trades in a row, you start feeling invincible, like you can't lose. You start bending your rules, taking on bigger positions, ignoring warning signs, and that's when the market humbles you. Protecting your capital isn't just about setting a stop loss. It's a complete mindset. It's about understanding that you are not bigger than the market. It's about having the discipline to walk away. Sometimes the most profitable trade you can make is to do nothing at all. Sitting on your hands when the market is choppy, or when you not feeling focused, is a professional move. It's capital preservation. Wealth growth isn't a flash in the pan. It's the natural result of disciplined survival. You stay in the game long enough, you manage your risk on every single trade, and the profits will eventually come. It's the compounding effect of not having to dig yourself out of massive holes. This is where emotional control becomes critical. When you're trading from a place of fear, greed, or desperation, you make forced decisions. You chase bad trades, you hold on to losers for too long, you cut winners too short. The market rewards patience and discipline, and it relentlessly punishes urgency and emotional chaos. So how do the pros do it? How do they grow their accounts into fortunes? They don't just jump in and increase their position size because they feel lucky. They increase size methodically, only when their strategy is proven. Their risk is strictly controlled, and their psychological state is solid. They treat trading like a business, not a casino. The goal isn't the adrenaline rush of a big win. The goal is consistency, longevity, and survival. It might sound boring, but boring is what pays the bills in this game. When you truly internalize the capital first rule, something amazing happens. You gain psychological freedom. You no longer terrified of every tick against you because you know your maximum loss is contained and acceptable. You're not desperate for every trade to be a winner. This allows you to think more clearly, execute your plan more precisely, and wait for the high-quality setups. You start trading from a position of strength, not fear. The graveyards of trading are filled with accounts that were blown up by ego. It's the trader who refuses to admit they were wrong, who doubles down on a losing position, convinced the market must prove them right. Ego is the enemy of risk management. Discipline is its antidote. The moment your ego starts writing the checks, your account is in danger. So let's bring it all together. Survival comes first. Profit is a byproduct of good survival skills. Your long-term success in this game will not be built on your ability to predict the future. Nobody can do that. It will be built on your unwavering commitment to risk management. It's about respecting the money you have, because that money is your ticket to stay in the game. And only those who stay in the game long enough get the chance to win. So, before you place your next trade, ask yourself, am I focused on the profit I could make, or am I focused on protecting the capital I already have? Get that answer right, and you're already ahead of 90% of traders out there. Thanks for watching. If this mindset shift resonates with you, hit that like button and subscribe for more content designed to make you a smarter, more disciplined trader. See you in the next one. There are questions so simple that everyone thinks they already know the answer. But the longer you trade, the more years you struggle in this game, the more you realize that the simplest questions are often the hardest ones. And today, I want to whisper such a question in your ear. A question that seems basic, yet it separates those who survive from those who are washed away by the market. A question that every legend, from Jesse Livermore to Paul Tudor Jones or Stanley Druckenmiller, has had to face. Is protecting capital more important, or is growing your wealth more important? Take a moment, take a deep breath, and ask yourself slowly, deeply, what am I trading for? Do I want to survive, or do I want to get rich quick? That question music begins might sound gentle, but it is the very root of a trader's life. You see, when we first enter the market, who doesn't think about growing their assets? Who doesn't dream of doubling their account? Who doesn't want to see that number swell day by day? We are all drawn in by the allure of quick profits, the stories of overnight millionaires, the intoxicating promise of financial freedom achieved in a matter of months. Every chart seems to hold a treasure map, every indicator a secret code, and every trade an opportunity to strike it rich. That initial ambition is the fuel that starts our engine, the powerful force that pushes us to learn, to analyze, and to take that first courageous step into the markets. But then, one day, you open your account, and what you see isn't a growing balance. Instead, you see a hole, a gash, a negative figure far larger than you ever imagined. And it is in that precise gut-wrenching moment that you finally understand. Protecting your capital is infinitely harder than making more money. I remember Paul Tudor Jones once said, "Don't ever let your account get to a point where you can't fight another day." It sounds simple, doesn't it? But when you're sitting in front of the screen, when the candles are moving, when emotions are surging, you hold on to that seemingly small principle. Do you dare to cut your losses? You have the discipline to walk away when the market is not giving you clear signals? Or do you chase the ghost of a missed opportunity hoping to make back what you've lost? The brutal truth is that most traders don't fail because their strategy is flawed or their analysis is poor. They fail because of a catastrophic lack of risk control. They blow up their accounts not in a single dramatic trade, but through a series of small, undisciplined decisions that accumulate like 1,000 paper cuts. Each cut seems minor on its own widening, a stop loss just a little, adding to a losing position, taking one more hopeful trade, but together, they bleed and account dry. The market legends, the ones who have endured for decades, they understand this game is not about hitting home runs. It's about not striking out. They focus far more on the risk of a trade than its potential profit. They ask, how much can I lose? Long before they ask, how much can I make? Because they know, with absolute certainty, you cannot grow wealth if you lose the ability to trade. Overconfidence is a silent killer, destroying more trading careers than any bear market or faulty analysis ever could. It's a poison that seeps in after a string of wins, making you feel invincible, like you've finally cracked the market's code. You start bending your rules, taking on bigger sizes, believing your intuition is now a superpower, but the market has a way of humbling even the proudest of egos. It waits for that moment of supreme confidence, and then delivers a swift, painful lesson. This is why capital protection is not just about placing a stop loss. It is a mindset, a deeply ingrained philosophy that governs every single decision you make. It's the discipline to acknowledge that sometimes the best trade you can make is to do nothing at all. To sit on your hands, preserve your capital, and wait for the high probability setup to come to you, rather than forcing your will upon an unwilling market. True, sustainable wealth growth is not a sprint. It is the slow, deliberate result of disciplined survival. Think of it like this. Your trading capital is your army. If you send your entire army into every battle, reckless and unprepared, it's only a matter of time before you are annihilated. But if you protect your soldiers, engage only in battles where you have a clear advantage, and retreat strategically to fight another day, you will not only survive, but conquer new territory over time. Emotional trading, driven by fear, greed, or the desperate need to be right, leads to forced decisions and, inevitably, bigger losses. The market rewards patience and punishes urgency. It pays those who wait for the perfect pitch and penalizes those who swing at every ball thrown their way. Look at the true professionals. They don't just randomly increase their bet size because they feel lucky. They increase size methodically, only when their risk is tightly controlled and the odds are overwhelmingly in their favor. They've proven to themselves, through a track record of consistency, that they can manage the downside. The primary goal of their trading is not the thrill of the chase or the excitement of a big win. It's the boring, mundane pursuit of consistency and survival. They understand that by making capital protection their absolute priority, they gain something far more valuable than money: psychological freedom. The freedom from the crippling fear of ruin, the freedom to think clearly under pressure, and the freedom to execute their plan without being hijacked by emotion. Traders blow up their accounts at the exact moment their ego replaces their discipline. It's the point where they can no longer admit they are wrong. They hold on to a losing trade, not because the analysis still holds up, but because closing it for a loss would be an admission of failure. They become married to their opinion, and the market, which couldn't care less about anyone's opinion, becomes the merciless executioner of their account. This is the golden rule that can save you from that fate. Survival comes first, profit comes second. Profit is a byproduct of excellent process and disciplined risk management, not the other way around. Long-term success in this arena is not built on the shaky foundation of prediction. No one can consistently predict the future. It is built on the bedrock of risk management. It's about creating a system where you can be wrong half the time, or even more, and still come out ahead because your winners are significantly larger than your losers. It's about having the humility to respect the power of the market and the discipline to protect your capital at all costs. Those who respect their capital, who treat it as the lifeblood of their trading business, are the ones who stay in the game long enough to eventually win. They are the ones who get to compound their accounts, learn from their mistakes, and evolve into seasoned professionals, long after the gamblers and thrill seekers have been wiped from the field.